Okay, good afternoon, everyone. Thank you for joining us. My name is Rebecca Johnson. I am the Executive Director of the Center for Architecture and Design in AIA Philadelphia. And today we're going to briefly go through the Education Improvement Tax Credit Program that is run by the state of Pennsylvania. Our organization, the Center for Architecture and Design, has a educational improvement certified organization program. Our architecture and design education has been approved by the Commonwealth to be an EIO, which means that we can receive donations from businesses who have, and they can receive tax credits. However, businesses also need to be approved by the program. And one of the ways that businesses that are not approved by the program can donate to our program is through a special purpose pass-through entity. It's a lot of words and it might sound confusing, but it's actually not. We're going to go through it today. So the purpose of today is for any businesses out there, business owners, partners in firms that live in Pennsylvania could reap the benefits of redirecting their tax dollars to the Centers program. The Centers program is a K through 12 program. We focus predominantly between grades 4th and 8th grade. We're in classrooms teaching architecture and design concepts. We have architects in the classroom, engineers in the classroom, textile designers, lots of designers, but we basically use the architecture and the world around us as a medium to bring students through the design process. We're really excited about the project. We've been growing and expanding, and we need resources to continue growing the program. So that's our program. We have more information on our website, philadelphiacfa.org. You can reach out to myself. You can reach out to Michael Spain, who's the Director of Design Education for the Center, if you have any questions about the program. I do want to, though, spend the bulk of our time today talking about the EITC program. I want to introduce our partners, Friends of Education, who are partnering with us as a special purpose pass-through entity. And they're here to answer the questions, because they're tax attorneys, about the tax law and what this program means for the businesses who might want to participate. So now I'm going to introduce Todd Unger and Jed Silversmith, our partners. Guys.
Thank you. Thank you, Rebecca. Let's see if I can get this to work. All right. I think the presentation should be up. So this is a program called the Educational Improvement Tax Credits Program. It's offered by the state of Pennsylvania, and it's available both to individuals and businesses. When businesses, which are special, owned by individuals in Pennsylvania, participate, there's a double tax benefit. So this program allows businesses who enroll this year to get a state tax credit, not a deduction, for their owners in 2022 and 2023. A tax credit is a dollar-for-dollar reduction in the amount of the payment. The credits in this case are actually awarded to an organization that Todd and I operate called Educational Opportunities, LLC. Businesses join Educational Opportunities, LLC, just as they would join any other business partnership that they might participate in. If you're at an architectural firm and you join the architectural firm as a partner, this is the same thing. At the end of the year, which will be in about 45 days from now or 60 days from now, the business participants will receive a K-1. But what's important about this K-1 is it's going to have some income loss items, and it's going to have a tax credit for the individual owners. And most importantly, and what makes this program so amazing, is the tax benefits of participation exceed the value of the gift. And as we'll get into it in a minute, if you're in the highest tax bracket, that means for every dollar you give to the Center for Architecture and Design, you will receive $1.30 back on your federal return if you're in the highest bracket. This is a very time-sensitive opportunity because our credits to the state expire on December 19th, 2022. We will have an additional round that will be due in March of next year. So this program is very limited. The funding for this program is very scarce. Last year, the state allocated $39 million statewide for all programs, including AIA's learning program. There are about 800 programs statewide, so there are a lot of organizations vying for a very small pot of money. This year, the pot was expanded to by an additional $7 million. So it's still a very small pot with a very large number of groups vying for this money. Let's talk about how this program works and why it's so powerful. Normally, an individual would make a $10,000 contribution to a charity, and they would receive a charitable contribution deduction, assuming they itemized, and assuming they were at a 35% federal tax bracket, and it would cost them $6,500 to make that gift because they'd get a deduction, but then they would get, and that deduction would lower their out-of-pocket by $6,500. So you can see I have that number in red. But if you make a gift through this program, there are two steps. The first step is the business gets that same deduction of $3,500, which lowers their tax bill to $6,500. But the owner of the business receives a Pennsylvania state income tax credit for $9,000. And what that means is that $3,500 plus the $9,000 yield a positive tax flow benefit or cash on cash return of $2,500. So you give $10,000 in this example, and your taxes decrease on the federal level by $3,500 and the state level by $9,000, and you're better off by the tune of $2,500. How does this work? Charitable gifts are deducted by businesses if there's an expectation of financial return commensurate with the amount of the gift. The IRS permits businesses to double dip. The rationale here is that an architecture firm or a firm that works with architects would gain some benefit by associating with AIA. They would be permitted to take this federal deduction of $3,500 and then, quote unquote, double dip with a state tax credit of $9,000. Who benefits from this program? Schedule C businesses, partnerships, and subchapter S corporations. Who does not benefit? C corporations or individuals who don't own businesses. So again, like this is an oh wow moment. EITC gifts are cash flow positive for pass-through businesses because of the federal deduction and the state credit. We typically ask businesses to commit to 2 years, although there's some flexibility there. And this is basically, if you enroll right now, your tax bill will decrease by 20 to 30% of the amount of your enrollment. Now, another question is, how much should I give? This program only works if you give up to the amount of your state tax liability. So you can't give an unlimited amount. You can only give enough to offset what you've earned in Pennsylvania income. And we typically refer donors to line 12 of their PA Form 40, which is your individual tax return on line 40. Now, a couple questions that we get asked. What if I've been paying quarterly tax payments to the Department of Revenue throughout the year? The Department of Revenue will refund any payment made for 2021 at some point next year. The refunds can take 8 to 12 weeks. So, be prepared to wait, but you will get money back that you've paid in. You cannot participate in an amount greater than your PA tax liability or 110% of your PA tax liability. What if I live or work out of state? Well, this starts to get a lot more complicated, and we encourage you to talk with your tax professional. But as a general matter, if you have income in other states, you have to exhaust what's called a foreign tax credit. Or if you live in New Jersey, this program does not work for you. But if you live in Pennsylvania or you happen to live in a state with no state income tax, this program will be cash flow positive for you. what are the next steps? You consult with your tax professional to determine the amount that you should participate. And then you execute what's called a joinder agreement, which is simply a partnership agreement that we send you on DocuSign. We'd ask for your capital contribution no later than December 11th, 2022, although we have maybe a day or two more flexibility beyond that, but not much. And then in January of next year, you'll receive a K-1 for the tax credit and the deduction for this year. Next year, we have slots that will open in about February with payments due in March. Does anyone have any questions? Todd, do you want to add anything?
I think like the most straightforward, after talking with a lot of people, is the credit, which is a dollar for dollar reduction. Essentially, you're already paying that to Pennsylvania, and Pennsylvania lets you then redirect the money. So instead of writing your check to the Pennsylvania Treasury, you then get to write it to the Center for Architecture. And then in turn, the federal code says you can also take an ordinary and necessary deduction if there's a reasonable expectation of a financial return. And the nexus between architects and the Center for Architecture is going to be very straightforward to make that connection. So it's a redirection of taxes you are already going to pay and a permissible double dip for the right entities, the pass-through, the partnership, the S Corp, Schedule C, which is like your single member LLC. So it's pretty powerful. And then the reason why there's a 2-year commitment, and we're flexible with that, and there's workarounds, but the reason why we're asking for that is Pennsylvania says if you commit for 2 years, you'll get the 90% state tax credit. But if you do it for 1, you only get a 75% credit. That's why there's a 2-year commitment in our agreement.
But the commitment's made by the entity that you're joining. So if you told us you wanted to participate this year, but you were moving, away next year, that wouldn't be a problem because someone else could become a new partner in your place. It's really only an issue if you called us the day before the money was due next year and said, I've changed my mind. But that typically doesn't happen, or it has not happened.
Rebecca, you're on mute.
And businesses that participate in the program will be acknowledged as supporters of the architecture and design education program. And we have different sort of levels of acknowledgement for that participation. So for the programming that we do and the communications that we do around architecture and design education, the supporters that give us EITC donations will be acknowledged.
I mean, I think that really is the most important part of this. It's like there's 3 wins here. First, your tax bill goes down. That's always a win. Second, you give the money to an organization that you care about and that you're interested in. And third, the organization uses the money for programming for children. So it's a win-win-win opportunity.
Yeah. Anybody
With money that you are already going to pay anyway,
back to the state,
right?
And now you're giving to an organization that's going to, it's the most philanthropic, tax advantageous way to pay your taxes this year.
Yeah. And it really is. I really thank you, Jed and Todd, because I think it's taxes. It's like makes some of our eyes sort of glass over sometimes. But there is a lot of opportunity here to do good and to leverage tax liability that you already have to the state and support the center's programming. So does anybody else have any questions?
Yep, I got one.
Yeah, Bob.
So just make sure I'm getting all this. You basically you ask the firm that's going to do the donation to sort of join your organization in a, I don't know, peripheral way, I guess. I don't know exactly how that works, but I guess they don't make personnel decisions for you or something, but so they have any other ties that come along with that? I mean, would they be worried about liabilities and
No,
other such
the only
things?
thing that this organization does is it just exists to distribute tax credits. It has no employees. It has no operations. All of the members of the LLC are individual small businesses. The partnership opts out of the partnership audit rules, so that there aren't even adjustments that are going to be made to the partnership return. And each partner will receive a K-1, which will essentially enable them to take advantage of both the federal loss, that is the gift, which is treated as a business expense, and the state tax credit, which is an offset to the owner's personal income, state tax liability. So it's sort of a, the business loss flows through the business, the individual tax credit flows through to the business owner's personal return.
Yeah. And this
And
is.
there really are no other steps other than writing a check and filling out some documents on DocuSign.
And the check is written to Center for Architecture and Design, or it's
No.
written
It's written to Educational Opportunities
Okay.
LLC,
okay.
which is the name of the company that has the tax credit.
Mhm.
And
To
then
apply,
Educational Opportunity writes a check for 100% of the gift to you.
to apply for these credits, you have to be a special purpose entity. That's the Pennsylvania law. The entity, as Jed said, it only exists specifically to get these credits.
Mhm.
So you join the entity, you write a check to the entity, the credits are yours, then the entity distributes the credits to the Center for Architecture. At the end of the year, you get a K-1 reflecting, a K-1 is a document that a partnership would give out.
Yeah.
It's like an informational return, similar to like a W-2 you would get. It's just a year-end tax statement, which would show the credit to the Pennsylvania Department of Revenue. It would show the loss to plop on the business return. And that's it. You sign a couple documents.
In this case, it's just
we
one
do all the
document.
accounting and the back end stuff.
Okay.
So, so right now, the push is for people to join your organization by what's the deadline?
So, I mean, realistically, it's got to be the first 2 weeks of December.
Okay. And you had said something about another deadline in March?
So
What is
that's
that?
right. So the credits are issued in these 60-day windows. There's a window that closes in mid-December, and then we haven't gotten it, but there'll be another window that opens in January that closes in March.
Okay.
This window is more advantageous for the simple reason that at this point, everyone should know what their PA tax liability will be, or it's reasonably foreseeable what that amount will be. So it's easy to make a commitment to the organization now. If you know you're making $300,000, then you can commit $10,000 to this program because you know what you're going to owe the state of Pennsylvania. It may be more difficult next year to enroll and forecast your income. Now, if you're a large firm with 10 partners, you can commit to some amount next year because you know you're going to earn some income. You just may not know how much. But this is sort of an
Liz,
optimal time.
the state, and it's really tough. It's like poorly administered by Department of Community and Economic Development. If they're watching this presentation, it's greatly done by Department of Community and Economic Development. So I
think
no,
we have
it's
short staff in this
it's
department. Though.
it's so hard. It's so hard. There's just not a lot of people working there. There's tons of these applications. They're put in a really difficult position. But you get this award letter. It's typically like backdated, and you have 60 days to use the credits or lose it.
From the date
December
of the original
19th,
date.
Right. December 19th is our deadline. Like the money has to be like in the hands of Center for Architecture. We have some other credits that expire like next year, but for all intents and purposes, like this is the deadline for these specific credits. And you're not joining our organization like Friends of Education. You're joining the special purpose entity which has the credits.
Mhm.
So, because I don't want people to think, like, you're getting into, and I'm sorry if this is like too PG-13 here, getting into bed with us. That's not at all the case. You're getting, the credits which are owned by this special purpose entity.
And this is not something that like Jed and Todd created. This is what the DCED created, this mechanism for
This-
businesses that,
Well,
right? I mean, you
Yeah,
guys
I mean-
created it in a way because you're tax attorneys and you know how to do that,
So the way we've set this up is a pretty common structure.
Right.
There's an organization called Blocks, Business
Yep.
Leadership for Catholic Schools. I think that's what it stands for. I forget what the O is.
Yeah.
Business Leaders Organized for Catholic Schools. And this program is primarily used to fund K through 12 education. That I think, we said there's $45 million for EIO programming like AIAs. There's another 250 million for K through 12 schools.
Yeah.
And the way most of these schools raise this money, some businesses participate directly, but most of the funds are raised through these types of special purpose entities.
Mhm. Yeah, it's pretty
yeah, the
common.
acronym is EITC. You may encounter people that are like, oh yeah, I give to it, I know about it. Most of the time they're talking the K through 12. They're all under the educational improvement tax credit, but there's different types. There's K through 12, which go to scholarship organizations, there's pre-K, and then there are these educational improvement organizations, which are the rare ones, because they're just so powerful. Everyone wants them.
Right. Yep.
So-
because of the benefits.
Just one other check writing question. So after you receive the check from the donor and who's now joined with your organization, then you write a check by December 19th to CFAD.
Right.
Yeah.
And we'll write one check. So if 5 people say they each want to contribute $10,000, Rebecca will get one check for $50,000.
Okay. Okay.
And then we coordinate everything at the back end. There's an additional 30-day period so that we communicate with Pennsylvania.
Well,
Yeah.
Rebecca sends us a receipt. We send that to Pennsylvania, and then the donor gets their K1. It's that
Mhm.
simple.
Okay.
But if
Okay,
you're
got it.
thinking of making your estimated tax payments now, basically this is your chance to make them to AIA and
Mhm.
save money by doing it. It's that simple.
And
And you can get a refund, which in all, you just have to be patient with it because the Department of Community Economic Development communicates with Pennsylvania Department of Revenue. But the point is, even if you've made your payment, you can still do this and then get the money back that you had paid.
once a business like becomes part of this special entity LLC, do they need to do that over and over again every year? It's just one
Well,
time or?
we ask for a 2-year commitment. If someone
Okay.
came to us and said, this year, we only want to do it, we don't want to do it next year, that's fine.
Okay.
But typically they would commit for 2 years. The program will renew again next, at the end of 2023. And they would have the opportunity in 2024 to participate again for 2 years.
Mhm. Yeah. All right.
Okay.
Rebecca, I just wanted to add a 4th win to Todd's list of 3 wins. So the tax bill goes down, the money goes to an organization you care about. We use the money for children's benefit. And then you get the publicity value of having your name
Mhm.
on our materials and acknowledgement, however that.
No, that's absolutely right. It's like,
so there's a 4th benefit to the company.
that's right. You're not spending your money in Harrisburg. You're spending it on essentially an acknowledgement or advertising deduction.
And Wendy, that's a good point because that's essential in what, I know you've been speaking with Jed, the regulations, which are the IRS interpretation of the law. Jed mentioned a couple of examples. One of them is somebody, a business that makes musical instruments or sells musical instruments, donates money to a church. The church puts, advertises that they've, made their donation. It's the business, and the business owner reasonably expects to get some more business from it. And then the IRS interpretation of the law says, hey, look, this can be, even though it's to a not for profit, you could still take a deduction instead of being limited by the charitable rules. So that donor recognition is key. And it's a great program, and that's why these are so popular and scarce.
Yep. All right, any other questions? If you are interested, please reach out to Rebecca or Jermaine, and we will get you in touch with Jed and Todd. This recording will be up. We'll send it around, but it'll also be on the center's website. So thank you, everybody, for joining, and thank you, Jed and Todd, for your time. I really appreciate it.
Thanks.
Thank you.
Thanks.